How are we doing, guys? Welcome to today's session. Moritz, Rolf, it's a pleasure to have you back. How are you both?
Great.
Good to be back, yes.
Awesome. I feel like we have to preface this session with an apology for having to reschedule this from last week. It's totally my fault. I caught some weird allergy in my chest and, basically couldn't speak for a week. But we're back. That's the main thing. We're back better than ever. And today it's going to be a little bit of a different session. So we're going to try and do kind of an interactive presentation, and then we'll do the standard strategy development stuff where we look at people's strategies. So if there's anybody in the audience or anybody who joins who has an Edgewonk trading journal or has a Darwinex Zero account, we'd love to hear from you. We'd love to analyze your strategy live. And then if you stick around for later on in the session, we are going to be doing a joint giveaway for Edgewonk and Darwinex Zero. Welcome, PX Lou, Rob. How are we doing? How are we doing? It's good to be back. It feels like I haven't spoken to you guys in a minute, so it's great to be back here. I'm just gonna double check that the stream is running successfully on Twitter and YouTube. So if you bear with me for 2 seconds, and then we will jump straight in. We are live.
Awesome.
Yeah, baby. We're live on all. Fantastic.
Hello, Tristan. Hello, Pascal.
I'm going to give the link 2 seconds.
Which ticker is that, Rob?
SPWL. It's fine. I mean, I know SPWL like the back of my hand anyway, because I look at it quite a lot. Actually, Rob is probably a great case to take a look at a little bit later on today, which we can get onto in a bit. But there's a lot that we can talk about when it comes to the strategy, Rob as a trader, his growth, and all of the stuff in between. Alfonso, welcome. Pascal, welcome. Tristan, I run UWW. Ooh, a classic Darwin. Let's take a look. UWW. Here we go. People are starting to join now. UWW. Awesome. That's going on my watch list. That is. Whenever somebody sends me their Darwin, I always just ping it in a bookmark and keep it on track.
Well, I saw you placed 31st, right?
What did you say? Sorry?
You placed 31st in September.
I placed number 8. Put some respect on my name, Rolf.
Wow. Top 10.
That was because the screenshot that I shared was it yesterday?
I saw it on LinkedIn. Yeah.
Yeah. So basically, at the end of each month, because of the way that we calculate the trader's rating, it takes the current month's return. So when that month ends, everybody's resets to 0. So there's kind of like this weird couple of day phase where the calculations all get thrown out of sync. So yeah, it knocked me down to 31st on the first day, but ended at number 8 last month, which is, I mean, it's a bit of imposter syndrome, really. I'm like, I don't know how I got there, but we got there somehow after a big month. Alfonso says, I run Yarks and LLAL. I like that ticker, Yarks. That's
Yarks.
Really
good.
Okay, then, guys, I can see the live stream is starting to fill up now, so we'll jump straight into the session. I am going to hand the reins over to Rolf from Edgewonk, who is going to be giving us a presentation into strategy development. So, Rolf, over to you, dude.
Cool. Yeah, thanks. So we're going to take about strategy development and how because we run Edgewonk. We have done this for 10 years. Over 5 million trades were entered in Edgewonk. We have more than 80,000 journals, and Moritz and I, we spend hundreds and thousands of hours looking into journals, only if traders ask us to, otherwise we don't pull them up. So we have learned quite a bit about traders in every different stage, from the very beginning when they're just fresh to the moment they make this transition to a break-even trader, how they then go on into seeing more consistent and profitable returns. And what is super fascinating is that at every stage, there are very unique challenges traders face, and very often there's the traders go through exact same struggles on their journey. So that's why I put this together so that we can see and learn from what we have seen so many times and what are the challenges. So the first thing, when you are starting out, or this is also true for traders who are struggling a little bit, who are losing money, they don't know how to progress, and they are in this phase where you're looking for your strategy, right? These days, I guess you find them on social media or YouTube, and there are many great strategies out there. The problem, what we have seen, fascinatingly, is that it's almost never the strategy that's the problem. And we have seen traders have really bad track records over a long period of time. But when you look deeper into the performance data, which is super easy in Edgewonk, you can often see that actually the strategy is profitable and the strategy is doing exactly what it should be doing. But all of the trades in between, where the trader is deviating from the plan and doing something they shouldn't, that's what's eating up their performance. So the first thing, you need to get to a place where you can see your true system edge. So the true edge of your system when you take out yourself out of the equation. When you have a journal, this is typically quite easy. You can just filter the trades where you followed your rules versus the trades where you didn't follow the rules. And this is just fascinating to see. Time and again, we see this. We look at the trades where the trader followed the rules, and the strategy is suddenly making money. And this doesn't just happen once or twice. We see this all the time, and this is something where traders actually get a lot of confidence, or should get a lot of confidence, because it tells them, hey, I'm about to do system hopping. I was about to abandon everything that I was just doing for the last weeks or months and look for something new. But that's never going to fix your problems. I'm sure most of you, or many of you, have been in this cycle where you go from system to system, right? And you believe, hey, this system isn't working because it didn't produce any results over the last 50, 100 trades or whatever. But the fascinating thing is when you really look at the true edge of the system, very often those systems are profitable. But traders misjudge their performance. And I think so many bad things come from this, where then traders are endlessly kept in this cycle and in this loop from going to system, but nothing changes. I'm sure a lot of you will be able to relate as well. This is something very common, right? So this is really, really important. Otherwise, you will be stuck in this first overwhelmed beginner, maybe even sometimes going to break even, but then you give back your profits and then you switch to a new strategy. But if you want to go from this this really beginner losing stage to then where you suddenly start to see some progress, it's so important that you are able to see your true system, so that you make the right decisions going forward. The next part, and this is something that ties in with the previous one, this is something that you need to get right from the beginning, and risk management and position sizing is really important. A lot of traders have this gambling attitude where they over risk, they have maybe no stop loss at all even, which is, especially if you don't do automated trading, fascinating to think about, because if you don't have a stop loss, you don't know how much you can risk, so that you can achieve a constant percentage risk on your account. And then every trade is valued differently, and this is obviously introducing so much noise. And when you read any of the books pretty much that are famous in the trading world, Trading in the Zone, Market Wizards, Come Into My Trading Room, traders always describe themselves as risk managers first. So it's really important that you figure out position sizing early on. And this is something that you should do on demo. You just have a demo account, and then you say, okay, I'm on whatever. If you trade Forex, then you look up, okay, what is the position? In these days, there's obviously position sizing calculators. You don't have to do this manually anymore for the most part. And you ask yourself, okay, my account is $10,000. I want to risk 1%. My stop loss is 20 pips, 20 ticks, whatever. And then you calculate how many lots or contracts I have to buy or sell. And what we have seen quite a bit is that traders, more than risking and destroying their bankroll, where they're losing a lot of money, The biggest problem here is actually that you destroy your mental capital, because recovering from mental capital, from a loss of mental capital, is much, much harder. I've seen a lot of traders, right, Moritz, where they're just frustrated and they just lose this passion and this joy, and they're just in this really, really bad mental spot where they've just blown one too many accounts, and then coming back from that is very hard, right?
Yeah, once your mental capital is depleted, you are very much in danger of blowing up your whole trading career, because it's so hard to get back to that level where you find the motivation daily to show up daily, and you need to show up daily with consistency to make it in trading. And it's just so hard if you are down in the dumps. So try to never get to that place.
Yep. Yeah, and the first thing, practice position sizing on a demo account so that you always know how to do your 1% or 2%, whatever it is. You should have a standard position size. And this is just so crucial to get to this next stage. And once you have figured out that you need to follow your rules more and be more disciplined on your entries, and you have your risk under control, then what we typically see is that traders then are in this break even to slightly profitable phase. As long as you cannot control your risk, and as long as you're still system hopping, profitable trading is not realistic to achieve. So those are the absolute two main things that you need to get right. And once you are in break-even phase to slightly profitable, then there's it's a very, very big misconception that traders focus on the win rate a lot, but the true metric that you need to focus on is the reward to risk ratio. Nothing is more important than your reward to risk ratio when it comes to improving your performance. When you have a 50% win rate, which is what most professionals have for a long-term track record, right? Of course, there are sometimes outliers, but getting from 50 to 55 is not going to make a huge difference in your bottom line.
Yes.
But getting up your reward to risk ratio, Moritz, maybe you can speak what we have seen so often, and it's always mind-blowing.
I mean, the one-to-one traders rarely are profitable, or actually we haven't seen a profitable trader yet with a 1-to-1 or less than that. But if you have a trader with a 2-to-1 or even a 1.5-to-1, then the equity curve suddenly starts going to the top right. And it's much easier to boost your risk reward than your win rate. But in the beginning, obviously, every trader focuses on win rate because losing sucks. Everyone knows that. No one likes losing. But then once you accept that it's part of the game and you actually focus on expanding your reward, that's when the magic starts happening pretty much for every trader that we've ever worked with.
Yeah, it's so fascinating to see in the journals. We have this feature where you can analyze the trade management effectiveness. And most traders in the beginning, they leave so much money on the table. If they would have just sit on their hands, if you use a physical take profit, most traders would do much better if they would just let their trades run to the take profit. But most of them obviously cannot do that. They can't sit on their hands, and they always have to micromanage. And because traders have never looked beyond the entry, once they're in a trade, bad things always happen. So you need to shift your focus from this entry-focused approach to the more what comes after your entry, because your entry is one point in the equation, and your system as a whole there's so many other variables. So correcting your trade management and letting your winners play out while being able, as we've seen in the last step, to control your risk, this is going to lift most traders from break even to slightly profitable, I would say. And then once you are in this phase, the problem here that we see is that traders get impatient. Once you're seeing a little bit of profit, maybe you've been in this break even phase for quite a while, which many traders are, then the problem here that we see is that traders just get impatient. They want their equity graph to grow too fast. And they don't accept that trading is really about the grind. So then what we do is, what we recommend and what we see is about really making your strategy your own. most of the time, and this is totally fine in the beginning, you find a strategy somewhere from someone on the internet, in books or wherever, and you copy it, and that's totally fine. But there comes a point where you have to ask yourself, okay, what are my strengths? What do I like? What also fits into my daily life? What is my daily schedule? When can I watch charts? And then you come to this point where you need to customize, and you come to tweaking and optimizing your system. You ask yourself about individual rules and components that you have in your trading. Maybe you throw something out, maybe you add something new, maybe you play around with time frames. You look at trading hours. This is something really incredible that we keep seeing. So many times we've talked about this here on the Darwinex channel as well. Traders do very well in the morning on the open, which not always has to do with just the open being the best time to trade because the market is moving. But afterwards, traders lose a lot of their performance just because they lack focus and they lose energy, and then the performance just goes downhill. So this is really important, that you really make the system your own, and you look at the different building blocks. And then comes the fun part. No, we're not there yet. But in that one, almost, there's something that I also want to ask Kieran about in the last step. Targets. When it comes, and this is something that we keep seeing many times, how do actually traders, when they have a profitable system, how do they make it more profitable? And it's not about increasing your risk. It's not about trying to find more entries, going to a lower time frame, but we see it time and again that the way to go is to experiment with target approaches. Maybe Moritz, you are here the expert. Maybe you can talk about how do you make strategies more profitable?
Most of the time it's by expanding your take profits. So a lot of traders, they have already quite tight stops, or there's not a lot that you can do there. Obviously, if your stops are too wide, and you notice that with our drawdown stat, then just reducing your stop loss by 25% or so can boost your risk reward a lot. But typically what we see for most traders is to simply work on your reward before you enter a trade. So I would go over all the big winners that you had from your last 100 trades or so, or from your last year, and see what separates those big winners, for example, from your average winner. Or if you always have a 2-to-1 risk reward in your system, then of course you have to utilize our updraw stats, or you can utilize the alternative strategies that we have in Edgewonk. Super fantastic feature that lets you test different take profit, different stop losses, different trade management ideas. And for me, typically what I like to do, no matter how complex my trade management is, I have a 1-to-1, 2-to-1, 3-to-1, 4-to-1, 5-to-1 set and forget in the alternative strategies. Interestingly enough, all the fancy ideas that I have for my trade management, the 3-to-1 set and forget very often outperforms all of those fancy ideas, which is quite interesting. And we see that for a lot of traders, again, that we have worked with in the past years. If you do a 2-to-1 or a 3-to-1 set and forget, most of the time it really outperforms all of those weird moving average, trailing stops, etc. But then, of course, beyond that, you can always increase your yield as well with, I don't know, Fibonacci extensions, trailing 1 hour 50 EMA, or doing a Bollinger Band when price expands outside of the Bollinger Band and you sell into strength. Or there are so many great ideas. And I really encourage everyone to be super creative about their take profits, especially about their trade management, because there's so much edge there that you cannot make up by simply focusing on entries and win rate.
Yeah. A year ago or 2 years ago, we talked to Dr. Steenbarger on our podcast. And then I asked him, so what's the number one quality or trade that you see in profitable, successful traders? And his answer is a curiosity, or was curiosity. The traders who are curious, who are trying things out, who are open-minded, he said those are the ones that generally seem to have the biggest success. It doesn't mean that you change your approach every week or every month. It's just exploring through data and through analysis different ideas. What could be, what will happen if I change my target to a different level, or if I use a different tool for my targets, or for my whatever you are using in your strategy. And very often you will not find anything, but it just takes one thing, one finding to really change your approach. And this is another fascinating thing that we see in Edgewonk. We've been talking to a lot of our users, and everybody trades differently. But in the end, the strategy, there's no magic strategy. You have to find something that just makes sense to you, and then you need to get over those hurdles, right? Not trading outside of the system, not over leveraging, not blowing up, constantly looking for small tweaks and improvements, and that's really what makes the difference.
Yes,
So
and
that's
also one big thing is that I can give a tip to everyone right now, which sounds very simple, but it's incredibly powerful. If you're trading intraday, then simply track in Edgewonk whether the daily was trending up or down, and then see whether you can adjust your take profit management based on the daily trend, because that made a huge difference for me personally and a lot of intraday traders that I know. If, for example, you are taking a long on the DAX yesterday, an intraday long, and you're getting out after 2 hours, then you're doing something wrong, because the whole thing is trending up like crazy. We bounced from the weekly EMA 20, for example, part of my system, not important, but the daily is trending up. And then if you buy the low of the day and your system says, I get out after 3 hours, then you're missing out on 10 hours. And if you simply look at the daily trend as an intraday trader, change your trade management approach based on that, whether you're doing counter trend, with the trend, or range based, huge improvement for every trading strategy intraday, I can guarantee you. Yeah.
And then we come to the final step, and this is where we go into this long-term, how do you make trading a business? How do you set yourself up like a professional? And this is really about processes. It's the boring stuff, but it's the thing that really matters. In the end, you are sitting alone at home in front of your computer. Nobody forces you to do anything, which is awesome, but it's also sometimes not great, because, well, when laziness takes over, then everything falls apart. And this is something we see a lot. We have seen a lot of profitable traders. And then what you see in their trading journal, right? When they become profitable, then they think, I figured this out. And then their journaling routine lags. And then suddenly the performance also follows, and the performance is not great anymore. And then it is possible to go back, right? When you're very profitable, to go to a break-even trader. And then you have to dig yourself out of this hole again, and mentally it's just not great, and it's even not easy, it's not necessary. So once you have an edge, there's no guarantee that you will just stay profitable forever. So, and a routine, it can be very simple, right? It doesn't have to be complicated. What do you do before you start your trading day, right? How do you mark up your charts, your alerts? That's it. Maybe take a look at your journal to see, okay, what did I do yesterday? Are there any red flags that I need to be aware of? After you're done trading, make sure that you journal your trades. Just take a quick note, 5 minutes, write down what you thought about your trades after you're out of them, or when you've closed your broker, so you don't always see your P&L. On the weekend, do a deeper dive into your performance. It can be as simple as that, but it's really, really important that you have those processes in place, because they just guide your decision making and guide your development. And then it's really about grinding it out day after day, week after week, month after month. And this is something that I've shown many traders on Darwinex. You have this leaderboard, right? And you see which people have a lot of allocations. And you don't see that they have like hundreds and hundreds of percentage returns a year. You see that those are very modest, realistic things. And what I found really interesting, and I've talked to a few traders who said they had huge aha moments. It would be possible for them to create and to get maybe 20, 25% a year, but they're chasing 200% a year. And this is just a completely different game that they are in. Many traders, many more traders, I think, would be able to generate 20% a year if they would just stop chasing 200% a year. And I think this is just so important to get this mindset shift. You don't need those crazy numbers. And you can have a very, very good, profitable trading career. This is what I like so much about the data that you have on Darwinex and on the leaderboard. It's just fascinating. Yeah. Have you looked at this like this as well, Kieran, in this perspective? I think it's just so important for people to see those numbers and see that, okay, this is actually doable. I could do this.
Yeah, I think the biggest problem, right, is false perceptions from social media. Trading as and it's kind of a cliche because everybody says it, but when people say it, I still feel like people don't actually believe it. Trading is extremely difficult, one of, if not the hardest professions that there is, because there is not one person on this planet who enjoys losing money. It's so difficult. And you see these cliche tweets or videos on YouTube where it's like, trading is so hard, here's how to do it right. And you don't ever know if that person is actually legitimate unless they have a verified track record, of course, and then it's a little bit easier. But the guys who, and this is kind of a rule of thumb for everybody who I've had interactions with, the guys who put a lot of effort into building a track record and doing everything that they can to build out a career are not the ones who are talking about 100% per year or 200% per year, because whilst that's possible, and I know a lot of traders who've done it, you also have to take an insane amount of exposure to generate that return. And you might do it for 3 years, you might do it for 5 years, but eventually, like, you run the risk of having that come back to bite you in the rear end. And that's like, I don't think that's a career, constantly running away from blowing up an account. Whereas like, if you know that you can produce 20, 30% per year without having the risk and the stress of, I'm going to blow up this account or I'm going to lose what I've made, that's where you shift from I'm a trader to I'm a career trader, I'm a professional, I'm an asset manager, I'm somebody looking into the future. And like you say, some of our best traders, they top out. Of course, we risk adjust them, so their Darwin isn't always reflective of what they've made on their personal account or on their MetaTrader, let's say. But when we standardize it at the same volatility of the S&P, they are producing 20, 30, at tops 40% years, which is phenomenal because they're outperforming inflation, they're outperforming the S&P, they're outperforming the majority of the benchmarks that you would have for investment vehicles, while still being, quote unquote, as volatile as the S&P, which we know can drop 10%, 20%, and historically 50% during really, really bad periods. So yeah, that's kind of my brain dump on what you was talking about there.
Yeah, I think it's just so cool to see and to ask yourself as a trader, hey, can I do 20% a year? And I think most people, that was my take. Most people could do 20% a year if they would not chase making 200% a year. And seeing this is just so helpful in Darwinex, I think.
But I also think like 20% a year is still ridiculously hard. Like that there's still anybody who can generate a positive return, regardless if it's 1%, 10%, 100%, 1,000%, that person has put in endless amount of hours to get to that stage to be able to not lose. I always think of it when a trader starts their journey and they're in that initial phase where they might be strategy hopping, they might be building a system, whatever they're doing, they need to survive before they can like actually make money. Whereas traders are too eager to earn money, they haven't gone through that period where they just have to survive. And it goes to the thing that you was talking about, risk, is if you don't have risk management from day one, you're never going to survive. You can be the worst trader in the world, but if you have really good risk management and you're capping your losses and you're trying to learn from every lesson or every mistake that you make, then you will probably survive or bleed out very, very slowly. You know, but it's likely you won't blow up your account, which is super, super important.
Sure, totally. Just alone this mindset shift, getting away from not chasing 200% a year. Even I know 20% per year on a long-term perspective is very hard, and it will put you in the world class. But this mindset shift, just for traders, hey, can I make 1.5% a month? Most traders will not even think about those figures. Whereas if you would be able to achieve this will put you in the top percentile of all traders. And I think it's a very helpful mindset shift to just have those realistic numbers, because it's guiding your everything in your trading.
Yeah. Do you know what one of the biggest issues with when you're talking about like 1.5% per month? I think it takes a few, especially these days, it takes a few years to realize how good that is. I think the issue is when these funding companies started getting well known and becoming kind of like the entry for a lot of people. Like the majority of newer traders don't bother opening up a brokerage account. We can see that from the data of how many accounts, you know, FTMO or the Fivers and these sorts of companies open up on a daily basis. That's kind of the new pathway, right? I learn how to trade, I get a funded account and hopefully make some money. Their first experience is these weird rules of you need to make 10%, you need to make 5%, you can't go above this drawdown. And I get it. I use funded accounts. I have them for years. But at the same time, I understand that is an artificial trading environment where we're putting in these rules that aren't necessarily reflective of what it's like to trade professionally, right? You don't necessarily have a drawdown limit on a personal account. You may do if you're working for an institution. For example, if you're working for a hedge fund or an investment banker, of course, they're going to have a risk limit that they look at and say, you're not, you know, if you lose more than this, we'll likely boot you out the back door. But they won't be saying you need to pass X phase and Y phase to get a funded account and so that you can actually earn money. So what these newer traders do, and I see it day in, day out when they end up coming to Darwinex and going full circle, is they have these massive expectations of themselves because they've seen the 10%, they've seen the 5%, especially back in the day when they all had 30-day limits. So I remember taking FTMO challenges. I think I passed my first one in May of 2021. So we're talking years ago. And FTMO still had that 30-day period, right? So if you didn't pass in 30 days, you'd have to restart again. So it'd always get to the last day of the challenge. And if I hadn't passed, I'd just sling a 10-lot trade on gold and see what happened. But yeah, it creates that pressure and the unrealistic expectation because people subliminally in their head go, oh, 30 days, 10%, it's doable. Because I'm seeing all these people on Instagram or Twitter who've done it, and therefore I should be able to do it. But actually, that's not realistic by any means. Anyway, I'll stop ranting.
But I think this is a really important point because this is a completely different game that they're playing, right? It's not what trading used to be anymore. You try to flip your funded account. You take massive risks to maybe get a payout because you only spend $200 on it. So this is really just flipping and trying to get big accounts, but big payouts every once in a while. Then you blow your account, you start again. Who cares? But if you're really about building a long-term track record and really in this for the long term, you want to build a career, then I think it's really important that you understand which game are you actually playing and what are the rules and what are the objectives. I think this is really massively important that traders understand this. They're just different games of trading these days that they could engage in.
And I think a lack of like awareness of what a professional investor would expect as well. You know, people ask me pretty much on a daily basis, how do I get more investor capital at Darwinex? What do I need to focus on? And I always just say, just perform, right? Like there's no kind of golden rule as to what an investor will look for. However, I can say with absolute certainty, if you're doing 100% each month, an investor is going nowhere near you, because investors are kind of the most skeptical people that you will ever meet, especially if they're a larger investor. They're probably used to 10, 15, 20%, whichever avenue they go down, whether it's property, whether it's a mutual fund, whichever avenue they go, those are the sorts of returns that they're looking at. If you can beat that, you pretty much, you will be able to raise capital from anywhere, as long as you have, the skills and connections to do so. But the main thing is just perform, right? Perform to a good level. Don't, again, Rolf, like you said, don't focus on making as much money as you can in such a short space of time, because that is not reflective of what long-term trading is all about.
No.
Yeah, I think that's why it's so important that you understand, why are you in this? What is your end goal with trading? Do you want to keep flipping accounts and hoping for a big payout every now and then? Or are you really in this to build a track record and attract capital and just have this career that is sustainable for the long term?
Yes. One of my friends in Hong Kong, working for a fund, his drawdown rules are 6% per year, or 6% from higher watermark, and he needs to make 5% a year. Those are the kind of returns they're going for. And as long as he doesn't touch that 6% drawdown, and he makes those 5% per year, everyone is super happy.
Mm-hmm.
It's such a different game I think it's so important for traders to hear what are the possibilities, because as you said, now funding has completely taken over, and it has distorted I don't want to say old trading, but trading in this sense, where you really want to build a career, is all about. It's so important, I think, to get this message out, that there are different games that you're playing, that you can play.
That's the key point, right? It's like a game. Like, I mean, I know you two are the same, but I come from a time before funding companies, or I guess at least before. I think FTMO was around, but they were kind of underground. They didn't really make an appearance, or they didn't become popular, let's say, till about 2020. So at that point, I'd already been trading for a couple of years then anyway. And I remember going back to when I first started trading, when I found the gurus on Instagram, and they were talking about compounding your personal account. And even before funding companies came around, I was still thinking, oh my God, there's so much money to be made here if I just stick at it long term. And then all of a sudden the funding companies come about, and it's like people just forget long term. Like, people don't, and this is the thing, people don't care, because they see, and I've got a couple of close friends in the prop space. So I'm sure people know who Trader Kane is. He's a friend of mine. He made 2.5 million from Apex, right? Landed in one payout. And people look at that, and whilst Kane is fantastic, he's a bit of a unicorn, right? There is not many people who are achieving that level. But what people will do is they will look at Kane as an example, and they will go, that's where I need to be. I need that 2.5 million payout, not ignoring the fact that for every one Kane, there's probably a million people who've blown their accounts that week and stuff. And again, it's all going back to that expectation, the expectation of what you can achieve within a specific time frame, what's expected of you to be achieved as well. Hence why we don't put any targets at Darwinex, because A, we don't need to, but B, why put additional pressure on traders?
Because hoping that you're an outlier is a horrible business strategy.
100%. Like, you can't aspire to be the unicorn. If it happens, it happens, right? But and don't get me wrong, I'm sure everybody would like 2.5 million to be dropped in their bank from one payout, of course. But you have to ask yourself, have you ever done that before? And this is a conversation I used to have, even years ago with people I know who would just start trading, and they would say, I've been trading for, a couple of months. I've done XYZ. I've taken this course. I've traded this. I'm going to go for an FTMO account. And I always used to say, and bear in mind, this was when they had the 30-day limit. They say, have you ever made 10% in 30 days? Oh, no, but what you're wasting your money for then, because if you haven't proved to yourself that you can do, you know, these challenges or even traded and made 10% over a year, how do you expect to do it over, you know, 1 month? Oh, I'll risk more. Okay, have you ever done that before? Because do you know how hard it is to increase your risk by 10x? Or I had a conversation with when I was trading at Rain, I had a conversation with Dan, who's the risk manager over there, who's just a fantastic guy to kind of, you know, be able to pick his brains. And he said to me, I can't remember how the conversation come about, but we were talking about risk, and we were talking about the capacity of what I could manage, and the capacity of what I've managed previously. And we got into the conversation of psychology and how would you feel. And I just said, if I was to be managing 5 million, I don't know how I would feel. You know, I could say, oh yeah, I'd be happy to manage that amount of money. I'd be absolutely buzzing, which I would be. But if I'm seeing 5 million in a balance and I've never seen that before, again, I don't care who you are, but that will hit you like a brick wall. If you're only ever used to trading a 10K account or a 100K account, even a million, by having 5 times the amount of risk in notional dollar value, it's a big change. And again, I've kind of gone off track there, although I'm still sort of in the realms of what the initial point was, is that, you know, people will adjust their risk to pass a challenge or whatever it may be, not realizing how much of a detriment it is to their actual trading.
Yeah, absolutely. And I totally get it. If funding companies would have been around 15 years when I first got introduced, I would have gone for it. I was maybe 23. I would have thought, okay, well, it's easy. Maybe I can just get lucky and get this payout. I totally get it from this point of view. But it's just, again, the point that I made is you need to understand that there are just different ways how to go about this. And if you want to build your long-term career on getting lucky every now and then, if you want to provide for your family that way, I think it's just a very horrible business plan. So I think it's really important that people are aware that there are other ways how to trade.
Yeah, I also think your focus should, and again, it is a little bit of a cliche, but every cliche in trading, I always think has a little bit of truth behind it. Is, you know, take your mind off the P&L, which is hard because, of course, the P&L is what pays the bills, right? So, you know, if you're down for the month, well, great, you've lost money. If you're up for the month, well, your bills might be a little bit easier to pay. But if you focus on the process, being curious, like Dr. Steenbarger said, you know, always looking to improve, focusing on the next 5 years of developing and saying, I don't know where I'm going to be in 5 years, but I know as sure as hell I'm going to be further ahead than I am now. The money will come, the AUM will come, you know, the payouts, performance fees, the growth will all come if you focus on the right things. But I think every day that you go by as a trader focusing on the wrong things is a day that you're delaying that exponential growth, because trading is exponential, right? It's not a step ladder where you make a bit of growth, you flat, you make a bit of growth, you flat. It's not a consistent growth chart. It is, you kind of feel like it's flat. You feel like you're about to give up, and then you see the curve, and that curve can be quite dramatic. And we've seen that on Darwinex a few times. So there was a trader who I met at the beginning of this year called Sanga. I've also interviewed him. He's a fantastic guy. And we opened his Darwin up to investment. And within a month and a half, he hit $1 million under management. And then I met him in London the week he hit $1 million. And I asked him, and he was like, it hasn't sunk in. Like, you know, a month ago I was managing 0. Now I'm managing $1 million. And again, it's that curve. Like, he'd worked for years and years and years building his strategies, optimizing them, working on being a trader / developer. And then all of a sudden, boom, 1 month he'd achieved more on paper than he had for the past 5 years, let's say. And it is just a reminder that curve can be and will be exponential.
Yeah, I think it's with everything, right?
Not exactly, just, yes. Yeah. If you look at any stars, I don't know, rock stars, movie stars, TV stars, doesn't matter. They have already been working on their career for 20 years or sometimes 10 years. and you never even heard about them, and then one movie, bam, they blow up. And that's pretty much the same in trading.
Yeah, I mean, it's like athletes, right? And people always have that overnight success view of them, but
Yeah.
but you don't see all the sacrifices that these people made. And
Yes.
I feel very lucky personally, because I don't feel like I had to sacrifice too much to get into trading. But I know people who lost relationships, friendships, gave up sleep every night. There's so many sacrifices that you make to then become an overnight success, which again is another cliche. I'm trying to get as many cliches into this as possible, I think.
Yeah, but that's it for the presentation. It encapsulates the most important things that we see, how traders always take the next step in their development. And it's fascinating that 90% of traders will have the same struggles at exactly the same time, and how you go through them is always also very similar. So just super interesting. Although you say trading is so individual, it is, but the challenges are very, very similar.
Yep.
Rolf, I wanted to ask you a question, actually, going back to, I think it was something that you said at the beginning of the presentation, where you was talking about risk to reward and win rate and those sorts of concepts. I used to say, when a trader is, and I kind of want your opinion on this. There's two sides of the fence, I used to call it, and I would identify which side of the fence that the trader was on. I would say, and it's dependent on, I guess, more than just this, but I would say if their win rate was below 50% and they were a losing trader, I would say you was on the left-hand side of the fence. If you were profitable, regardless of win rate, I guess, you'd be on the right side of the fence. Now, for those two traders, I would optimize their development very, very differently. So for the traders on the left-hand side who weren't profitable, whose, let's say, their win rate was 30, 40%, I would always push them to try and increase their win rate to at least 45, 50, 55%, just to get used to building systems, understanding the market, etc. Whereas the guys who might be break-even traders, they might be slightly losing traders, but at least they have a process and they have an edge. Then I would say you're ready to look at optimization. So working on your risk to reward, looking at your maximum excursions, trying to take as much from your winning trades, trying to reduce the amount of not necessarily the amount of losers that you take, but the amount you lose on those specific trades. And it's interesting because you're kind of saying that win rate isn't important, which I get mathematically. But do you think that that's right for every trader?
I think it's really important that you understand, if you have a 30% win rate, how many of those trades that are losers are actually my fault. If you would exclude those trades, which normally are losses where you deviate from your plan, would get you from 30 to 40%. You have to work on that. Obviously, it's clear. Those are not your system. Those are noise and they drag you down. And then even if you have because it could also be you have a 30% win rate, but you're a trend follower. So if you have a 4-to-1 reward risk ratio with a 30%, you're making money. So yeah, working on your win rate, and this is why it came later, right? It came here. It came at this later stage where we say, okay, don't work on your win rate, because in the beginning you already had to figure out how many of my losses are actually me just being stupid and taking dumb trades. Once you have that figured out, and once you're over that stage, then working on the win rate, I don't think is really necessary. And there's not more potential here as well. But it's really important that you have figured this out at this stage.
Yeah, of course, it could be that you as a trader, you say, if a system has below 40% win rate, I don't even want to touch it, because it's going to have these long losing streaks, and I'm not made to trade a system like that. That's, of course, possible. Then, of course, it's always a trade-off, right? The higher your win rate, the lower your risk reward is going to be. And that then means that the higher your win rate, that means your accuracy has to be way higher as well. If you're a high risk reward trader, small mistakes that you make, for example, when entering, doesn't really matter too much, because if your win rate drops from 20, let's say from 30 to 24, it doesn't really hurt your edge that much. But if you're a really high win rate trader with a very small risk reward, if your win rate drops from 60 to 55, you're already destroying your edge completely. So I think for most traders, while they are chasing the high win rate because they think it's easier to trade, the reality is that it would be way easier for them to chase the high reward.
Yeah. It's extremely difficult to build a strategy that has a high win rate, period. Like, extremely difficult. I mean, I have again, I kind of split it into two ideas for different types of traders. So when I first started changing to being more of an algorithmic trader and building a portfolio, I did a lot of work into trying to model my portfolio to have the smoothest sort of curve possible. Of course, there's going to be bumps, there's going to be drops and stuff, but I'm trying to model the portfolio how I feel comfortable, which is just steady growth over time, 10 to 15% a year, nothing major. Of course, I get scaled up at Darwinex, which is great, but I think if you're a single strategy trader, which is the majority of discretionary traders, aiming for the higher risk to reward is way better than aiming for a high win rate. Again, because of everything that you guys have already mentioned. But when I'm building my portfolio, I have a couple of higher risk to reward systems, but the majority of them are high win rate. Again, they're very difficult to build. The ideas are very difficult to kind of formulate because there isn't something that consistently happens, because if it did, people would be, well, rinsing up the market on a daily basis, right? I have a couple of strategies that are about 80% win rate, but they do have a negative risk to reward. I'm happy to have them in there as part of a portfolio because generally the difference with a portfolio as opposed to a single strategy or a discretionary trader is the drawdown actually becomes stagnation instead. So if I've got 10 high win rate strategies all running together, right? If one of them goes for a bad patch and has a couple of losers, generally, because the other 9 strategies are uncorrelated with strategy A, but they're still all, 70, 80% win rate, they're still quite high win rate, they will balance out. So even if I take a bigger loser on strategy A, generally strategy B, C, D, E, F will make up for that loss, which actually puts me into stagnation and it kind of cancels it out instead of drawdown. Whereas if you're a single strategy trader, like a discretionary trader, that loss might be 3 times the size or twice the size of your winners, and therefore it can massively hit your curve. So your curve has this big drop off, whereas mine just stagnates a little bit. But then when all the strategies align and work together, that's when you go for stagnation, a bit like a ranging and trending market. Your equity curve goes through a bit of stagnation. All the strategies align, your equity curve goes up, stagnation goes up. So yeah, I just wanted to go over that because I think it's interesting. It's something I'm still trying to model out, I guess, and test and run sim tests on. But I do think there's a massive difference because I did used to trade a lower risk to reward strategy as a discretionary trader, and I had a fantastic 2024, had an awful 2023, had an awful 2024, and I was kind of like, this, I'm great 2024, awful start to 2025. And I was kind of like, I'm at the mercy of the market effectively because math isn't on my side and neither's the market. So my win rate's not going to come and help me because I'll just keep losing, and the maths isn't there to back up the strategy because my winners just aren't big enough. But again, when it's running as a portfolio and you've got multiple strategies all operating at the same time, I think you mitigate a lot of that. But I'm not sure. I'm not sure if you guys deal with many algo traders at Edgewonk anyway.
Probably not, because if you're an algo trader, you probably you get the reports from TradeStation and so on. You don't really need a trade journal. That's like, we are mostly focused on discretionary traders for sure.
Yeah.
I mean, you're probably familiar with Robert Pardo, like the inventor of walk forward optimization, all that stuff. He always posts his returns on his website right now. super interesting. I just went there because you're talking about algo trading, and he makes like 100% per year, 80% per year, obviously with bigger drawdowns, but still fantastic. I mean, the guy is a maniac with his strategies, but they have a profit factor of 1.3, for example. And if you look at the equity curve, they are flat sometimes for a year, his strategies.
Yeah.
Now, if you're a discretionary trader, can you take 200 trades per year while being flat?
Yeah.
I don't think you can.
There's a huge mental toll with that.
Yes. So I think most traders that if they are trading discretionarily with a profit factor of 1.3, they're going to go insane. So discretionary traders, typically they have higher profit factors. Because yes, discretion, if you really know how to use it, it gives you a greater edge than algo trading. But on the other hand, if you have to trade a strategy with a smaller edge, it's so much easier as an algo because you repeat it 1,000,000 times, 1,000 times per year, and it just churns out your positive expected value. And that's that, right? So yeah, that's also why I think higher risk reward makes a lot of sense, because it boosts your profit factor as well. And it keeps you sane as a discretionary trader. Yes.
Yeah, the thing with I noticed this as well with combining all my strategies, because all of the data is so different between all of the strategies. Or at least my portfolio, I think the profit factor is 1.45 overall, but it's always dampened. Like the sharp comes out really weird because all of your winners and losers might be different per strategy. So one strategy might lose $300 on a losing trade and take $130 on a winning trade. And then I have another strategy might take $300 on a winner and then lose $50 on a loser. So it can't quite calculate like an accurate Sharpe ratio or profit factor. So I always take them with a pinch of salt unless somebody's trading one specific strategy, if that makes sense.
Agree, yes, totally.
Because, well, I was looking at mine and I was like, that can't be right. Although 1.45 I think is fairly accurate, because profit factor is a very standard calculation, right? It's profit, take away your loss. And so essentially it's like you make 1.45 your losses in net gain. But like Sharpe ratio, everywhere has a different way of calculating Sharpe ratio. For example, if you run a back test through MetaTrader's in-house strategy tester, they calculate Sharpe ratio different to if you ran it through Quant Analyzer from Strategy Quant. That calculates Sharpe in a different way.
Yep.
So your values are always slightly different, which doesn't give you much confidence anyway.
There was a question. What's the name, Moritz?
Robert Pardo, Pardo. He has some books on Amazon, like the total classics of algo trading. If you are into that, then I recommend checking it out.
Have you ever tried, either of you two? Have you ever tried algo trading, or have you 100% always been discretion?
No, I did for a while, and my problem with algo trading was that it says that the dream is you don't have to do anything and the algo makes money for you. And then the reality of the situation was that I was still sitting in front of my screen the whole day, looking at the algo, that it executes correctly, that my VPS has an internet connection, that there's no bug in the code, that TradeStation doesn't crash, and I'm like, screw this, I'll just do it manually.
Yeah.
So it's like, which suck do you like most, right?
Yeah, I also think that's a massive misconception. And I had a conversation yesterday with a fund manager who we were talking about my strategy and talking about the infrastructure of his fund and stuff. And the first question he asked me was, do you have control over your systems? You know, because if you were to, I don't know, buy a strategy on MQL Marketplace, you might not know the source code, you might not understand what it's doing, you might not even be able to touch the trades, which is so important. And an example today was I was long silver into all-time highs. I closed the trade at all-time highs. Well, it hit target. And this about a minute after it hit target, I saw that it fired off another long on gold. And so I opened up the chart and I was like, no way. I'm not holding this trade. We've just gone into all-time highs. There is absolutely zero chance. It's a breakout strategy, right? So it will long above X levels. And so I closed it within 5 minutes. It was like absolutely fell to the floor. And I was like, I would have taken a loss on that, even though looking at it as a trader, of course, you can never be 100% certain. But I know long in all-time highs is just a disaster waiting to happen. And so I said to him yesterday, like you said, Moritz, I'm here every day at my desk watching the trades anyway. I don't physically press the button to execute, but I'm still manually overseeing everything that goes on and everything that happens, which, again, I think is a misconception. What people have of algo trading is you press a button to switch it on and then you live happily ever after, which is not the case at all.
Exactly. Yeah. I mean, you need to re-optimize as well, etc. You need the whole infrastructure, and then you're on a plane for 12 hours. You don't have Wi-Fi, and you're always hoping that your algo doesn't the server center doesn't burn down and your algo bankrupts you, or there's so many variables on top of your actual trading performance that I eventually said, I'm going back to discretionary trading. Then when I'm on a plane, I just don't open any trades that day and I can relax. It's pros and cons, like everything in life. Right?
Not the last time I went to Madrid, but the time before to visit the Darwinex office, one of my limit orders on gold got filled. This was when I was discretionary trading, and I landed the other side in Madrid. I couldn't get Wi-Fi on the plane. It was probably because it was a Ryanair flight, and I landed the other side, and I was so stressed because I knew I'd just been pinged long gold, and I was like, I can't see it. Obviously, it's all being tracked. I had funded accounts on it, and I was like, knowing that I can't see it makes me want to see it, whereas like, I'm not really too bothered about the outcome of a trade if I have my screen open here. I don't care whether it wins or loses, but not being able to physically see it, I was stressed.
For sure.
Yeah, guys, you've got a question from Jason in the group. I'm presuming your Canis Lupus from the Discord server because you've got the same picture. So welcome, dude. It's a pleasure to have you here. Question about performance by weekday on Edgewonk. For swing traders, does it use the open or close of trade? On Edgewonk, my worst day is Wednesday, but on Darwinex, Wednesday is my best day.
It's open, but you can change it at the top. When you're in your Edgewonk, you have the two filters, and there's a little settings symbol, I guess, what it's called. And when you click on it, you can change it between entry and exit date. So you have two options depending on how you want to look at it.
Yep.
I wonder if Rob, are you still in the audience? If you are, ping a message into the chat, and we'll load up SPWL.
Sounds good.
Let me see if I can.
You need to take over the screen.
Yeah, I'll show you the. Show you the trade. So this was gold. Oh no, that was silver. Sorry. Where's gold? So it got long right up here. And I was like, absolutely no way. I'm closing. I'm not sitting through that. And then and I always think like I don't like intervening. I just don't like doing it, because the whole point is it's automated, right? I've put in the work to build the strategy, but there's no chance I'm long in all-time highs like that. And I remember loading it up. I was like 5 minutes after, and I was like, oh, okay, good job I did that, right?
I mean, you could always add an extra rule, right? Don't go long at all-time highs.
Yeah, true.
So
SPWL. So, a little bit of background about Rob. I've known Rob for probably 1.5, maybe 2 years now. He's changed his approach more recently in the past year to become a swing trader. of course, since then, he's performed exceptionally well, far better than he did when I first met him. He's now in Darwinia Gold. You can see out of Gold, he's 103 out of 415 members or Gold participants. Now, an interesting thing about Rob is he is extremely hard on himself. And I'm sure you two have probably spoken to traders who were very similar, is they will go on a hot streak and then, you know, perhaps a couple of losses or a bad day at the charts, and they all of a sudden feel like everything's crumbled down. And so I had a chat with Rob the other day, and I just said, you need to take a step away from the charts for the rest of the day, maybe the rest of the week, and then come back stronger next week, right? Whatever you did yesterday is kind of not relevant to tomorrow. But then when you look at his equity curve, you're kind of like, what were you stressed about, right?
Exactly.
There's nothing wrong here. But shout out to you, Rob, because I remember the conversations we were having a year ago, and the progress that you've had since then has just been absolutely fantastic. So great. I'll go through some of the statistics that we have, and of course I'm going to be relying on Rolf and Moritz as well to kind of go through them with their knowledge and experience and see if we can find any kind of, maybe not low-hanging fruits, but if there's anything that you can do to improve how you trade. So again, swing trader, we've got 94 trades over the past 10 months, I think your record is. 11 months, 10 because December's flat. You started on the 30th of December. So let's say 10 months, okay? Which is effectively 10 trades per month, maybe just under. You got an 81.54% long exposure, which is quite high. I can't lie. I'm interested actually.
What instruments?
If we take a look at your market correlation score, for those wondering, the percentage long exposure essentially is what it says in the tin. How often do you go long? So this is saying that Rob goes long 81.5% of the time. And interestingly, he has a market correlation score of 9.9. So there is no discrepancy on how he performs between whether he's going short or going long, which is great because that's always a concern. If somebody's very heavy into one direction, I sometimes look at their correlation and see, okay, if they're awful at trading short, is that the reason as to why they trade long? Which can come into things like maybe you have an issue with the way that you determine your bias, or just a perception of your chart. I actually learned from my journal a couple of years ago. I think I had something similar. My long exposure was like 80% or 75%, maybe even higher than that. And I realized that I was just quite pessimistic when I would look at a chart. And I'd look at a chart and I'd be like, I could really easily see it tanking, but I couldn't easily see it pumping, if that made sense.
I think it's good. Yeah, this is really normal. I think I've seen this so many times. People always see the short, but the long is really difficult.
But for example, in trading, if you just right-click on the axis and invert chart
and flip, but you got to then change the colors of the colors of the bars because your red bars are going up.
True.
But it was that was interesting for me because I then implemented like a mechanical bias where I basically looked at the previous day's high and low to give me my bias, and then I would execute in the same way. And it reduced my net long exposure from like 70-80% down to 52 or 53% it was, which was massive for me because I would never go long. I was always scared.
Honestly, I think it has to do with scaling because you want to typically buy in an uptrending market. And when you look at your charts, the market is already hitting the top right corner. And then you only see this big empty space underneath it, but it's already at the top. So I think it has to do, I've been thinking about this for many times, and I think it really has to do with scaling.
Yeah, totally.
It's interesting you say that because I'm just loading up TradingView now. I'm weird, right? I've got like weird quirks. So I would always have to have my chart in the middle like that, but going up. So even if it was like, I don't know, if it was like that, I'd have to get rid of that just so I saw it going up. And that was really like detrimental because like you say, it already looks like it's gone up. And I was a mean reversion trader. So I'd be like, okay, I need to short this at every opportunity. And I would just never see the longs But I think you're so right, having the, up and to the right. That's actually the bias I used to have, these lines here.
Okay.
But yeah, as soon as I implemented that, I got rid of that that high long exposure. And it's not to say that's a bad thing either, Rob. That's, it's not saying it's a bad thing. I just it just is quite skewed to the one side. 52% win rate with a payoff ratio of 1.96. So you have fantastic risk to reward, just under 2R on average with a 52% win rate. So I don't know if you guys have any comments like that, but that long term is golden ticket, right?
Yeah, it's a money printer. Keep it.
Can you go down a bit? I would love to know what happened in August. You had in the previous example, you had those months.
This one.
I think August is like 9% or something when you go down a bit.
Yeah.
Yeah. What happened there? Because this is really the big months of the year. Did you just trade more, or that would be really interesting to see?
So if we're looking at August, is from this bar to, and this is the excursion chart, to this bar. So you can see they're pretty much all he was just on a hot streak. Or there's Nikkei, dollar CAD, Nikkei, euro dollar, dollar yen, gold, New Zealand CAD, euro Aussie. So I don't know, Rob, was there something specific in August, or was it just you was hot on performance because you barely took any drawdown in that August month?
Much wider targets the way it looks like, right? Because when you look in the following months, the green bars are not as long, except for a few outliers, but that really stands out.
Yeah, and you manage your downside very well as well. Like your maximum adverse excursion is super tight. I know, of course, there's spikes, but that's nature of trading different assets, right? It's not always going to be 100%. Nikkei was the best trade. Yeah, that looks this one. Yeah. Well, you took more on euro dollar, but Nikkei was pretty much there or thereabouts with both of those. You've had a couple of big trades. You had Aussie dollar, euro dollar, NASDAQ, Nikkei, euro dollar, and again, dollar CAD. Like, I'd say those are your outliers. But as a swing trader, and correct me if I'm wrong, Maritz and Rolf, like, again, to bring in a cliche, is you will make 90% of your return in 10% of your trading time, right?
Yes, especially if you are trading your, I assume, because there are such big outliers, he's probably trailing his stop and not using fixed take profits, would be my guess.
Yeah, most likely. I mean, Rob can clarify that, of course, but I remember having a conversation with a friend of mine, David Bell, and he said to me, I might make 4 trades a year. I mean, he's more of an investor in the stock market as opposed to a day trader, but he would say I probably make all of my money, or 90, 80% of my money, in 4 trades. That pays for the whole year, right? And it's kind of similar here. Like, you have to go through all of these, little losses, little wins to be able to be in the market to capture those big moves. And that's kind of what being a swing trader is all about, right? Is to, when you're in the move, you've got to stay in the move.
Yes.
Didn't Peter Brand share his stats once on Twitter, and it was really fascinating? I think there was also something like that. He has like a handful of trades which make his whole year.
Yeah, it's the same ratio. Like 10%, he said, make up for 90% of his profits, and the rest of the trades just cancel each other out. Small winners, small losers. That's
Well, that's kind of similar to what I was talking about with my portfolio earlier, where instead of being drawdown, it's more stagnation. You have to kind of go through that where you're not making money, you're not really going anywhere, and then,
But here it's so important to know how your strategy plays out. If you know that this is what you expect, you can deal with this. But if you don't know, then this is impossible to pull off, I think.
Yeah, so if you look at this is mine for a second. You can see May was 10%, April and June were flat, July, August, good months, but nothing crazy. September was a great month. So 2 months out of 6 have pretty much paid the majority of my return over the past 6 months. I'm not mad about that. It's just knowing that not every month is going to be, because you might look at this and go, well, it's 25%. What's 25 divided by 6? Oh, you might have a 4% or 5% month every month. But then next month you get a minus 0.5%. And you're like, well, that's a lot less than my average 5%. But knowing that that's the way it may fall, for example, minus 0.29, minus 0.19, and then you have that month where it's 7% or 10%, or that one trade that's 7 or 10%, like, you kind of know how to deal with it when the time comes.
Yeah, and I think that's where a majority of discretionary traders trip up, because they show up every day, they do their journaling, and they put on the trades, and then they just follow the process as best as they can for 2 months, and no results, flat or small losing. And then they say, oh man, I'm so done with this. Then they deviate from their plan, they switch strategies, whatever. And then, of course, they always do it at exact time when their strategy would have produced a really nice winning month. It's always like that. It's insane, right?
Isn't it like the study they had was it Market Wizards, right?
Yeah.
Yeah. I think we talked about this, where they looked at investors into hedge funds.
Yeah.
And although the hedge funds were making money long term, the investors were losing because they were always switching to a better fund at exactly the worst time.
It's trading the funds, basically. The funds equity curve.
Yeah, trading was the same.
It's hilarious.
Yeah.
Well, this is where trading and investing goes against standard human nature, right? Because we're very protective over pretty much anything in our lives, but over money, like, there seems to be, and I guess rightly so to a degree, there's this protective element where you're like, I've given my blood, sweat, and tears, time, effort, energy to earn this money. Therefore, I'm not comfortable losing it. And if you're like that, you probably shouldn't be trading or investing in the first place. But even if, just because somebody has more money, you know, maybe they're investing with 100K, maybe they're investing with 1 million, 10 million, doesn't mean that they don't have the same emotional trip ups that you might do with your £1,000 or your £100 or your 10,000. So when you have these guys who are investing large amounts and then initially they might see drawdown, I've seen it before as well. And, you know, they might have paid management fees. They might have paid whatever costs they have to get in and out of an investment. As soon as they're in it, they feel that emotional weight of the money dragging them down. And if you have a bad month, it's very easy to be like, the grass is greener elsewhere, without waiting for the recovery.
Yeah,
and
totally.
It's like you say, they always make that decision at the worst time. Like, and I've been there, right? Like, I'll be in drawdown. Again, I'm still kind of learning how to trade the way I do. I would still consider myself, you know, a beginner as such. And I'll have a couple of days where I might get smashed around, and I'll be like, well, that wasn't fun. Do I need to change anything? Do I need to look at the strategies? 5 hours later, I might be back up, and I'm like, oh, what a quick recovery, right?
Yeah.
But I have to stop myself from making those decisions in the moment, because, like I say, it doesn't matter how much money you have, how many years experience you have. Whenever there's money at stake, or something even greater than money, if you're running a fund, if you're publicizing your track record, if you're teaching traders how to trade, there's always an extra pressure that I feel is worse than money as well. Like, if you've got people watching your performance, that's worse than losing money.
Yes, absolutely brutal. Yeah.
They're not gonna only watch; they're gonna call you up and ask, "Hey, if you manage a fund," that's even worse.
True.
That's why I feel like there should be more, not strict regulations, but there should be more awareness about risks when you're investing into something, or even when you start trading, because everybody's too frugal with risk until it hits them in the face. Like, people, I don't mind risking X, Y, and Z. I actually helped a friend learn how to trade years ago. And we sat down on the trading floor that I had. It was only a local office. It was me and a few other guys who were trading some private capital. And one of my friends come in, and we were talking about it, and he was, I have a fantastic salary. I earn 50 grand a year, blah, blah, blah. I don't care about money. I don't care if it takes me 2 years, yada, yada, yada. And so anyway, we did some bits and bobs. He opened a trading account, and then I took a look at his journal a few weeks later. I was like, well, why did you trade that there? Or sorry, close that trade there. I thought it was turning against me. But you told me you didn't mind losing money. You told me it was about the process. You never mentioned any of this in your plan or how you're going to execute. But as soon as the money was at stake that you said you were okay with, you couldn't deal with that pressure. I'll get better. Okay, that's all I need to know. But I think that's most people experience that emotional tie to the money and kind of the lack of judgment when money is involved in the peripheral vision of that trader / investor.
Yeah, absolutely. I think everyone will go through that.
I'm not sure if you guys are familiar with this. I presume you have something similar on Edgewonk, but this essentially tracks what I like to call like your hot zones and your danger zones. So this will tell you the green blocks are obviously winning trades. The red blocks are, of course, losing trades. The bottom axis is how many pips that you took on the trade. So again, positive pips, negative pips. And then the side axis is the trade duration. So how long you're in that trade. Now, what I really like to do with this is figure out those two zones. So where's my hot zone where I can kind of be comfortable knowing this is where my expected value is at the peak? And where's my danger zone, knowing I need to be watching the trade here, or I need to be looking for to optimize my positions within this specific time zone. So because Rob's a swing trader, you would presume his danger zone is the first 30 minutes, the first hour, like the shorter amount of time he's in a trade, right? Because if you're in let's say you execute with a 30 pip stop and price just absolutely keeps tanking against you, of course, that's going to be a losing trade within the first 30 minutes, first hour. But if Rob sits in a trade for 3 weeks, he's very unlikely to be sitting in a losing trade for 3 weeks. So what I like to figure out is, or what I like to look at is, as a variable, the amount of time you spend in the market on average, what is your expected value for that period? So within 30 minutes, again here, Rob's won 9 trades. He's lost 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So he's won 9 trades, but lost 18. So his win rate is 50%. Now, of course, that doesn't take into account other variables, but just at win rate basis, he has a expectancy of 50%. Then if we go up, the higher we go up, the more trades he wins. And so therefore his expected value goes up based on how long he's in the position. I kind of took ages to explain that. I don't usually take that long, but I hope you follow what
Yep, fully. It makes sense. You hold your losses not as long as your wins.
Yeah.
Yes.
Yeah, which is super important, right? We track that metric up here, so your duration ratio. And this kind of really I didn't really put too much weighting onto this when I first started talking to traders and helping them develop their specifically their Darwin. But after a while, I started studying some of the top traders that we have, or some of the most consistent traders that we've had for 5 years, 10 years, for example. And a lot of them have a massively positive duration ratio, which tells me 2 things. They know how to cut bad trades and they know how to hold winning trades. So how important do you 2 think that is to, long-term success as a trader, being able to do both of those?
I mean, it directly takes us back to the risk-reward ratio that we were talking about in the beginning, because it takes 10 minutes to lose 1 hour, but it maybe takes 2 hours to make 3 hours, right? So it's the longer you're in your trade, the higher your duration ratio is. Obviously, the higher by definition your risk-reward ratio must be. And this is definitely one of the biggest predictors of trading success to me. Yeah, absolutely.
We managed to get through almost an hour and a half without done quite good. I've got some water.
Yeah.
Let's take a look at Rob's assets. So majority trades are on FX. So 62.77% FX, 14.89 indices, and 22% commodities. Now, what's interesting to me is the majority of Rob's return comes from FX, which you kind of would presume anyway, having the higher amount of trades within that category. But the fact he's made the majority of his return trading FX with an 81% long exposure just seems like strange.
That's really just
Usually when somebody has such a high long exposure, usually they only trade gold or NASDAQ.
yeah.
But actually, he's made the majority of his return trading FX.
Can you maybe elaborate, Rob, why you think that is? Is it simply you like long trades more, or do you have another explanation?
Kieran, do you have the stat where you can see performance by hour of the day? That would be, I would like to see that.
No, we have
that one underneath
performance
is
by
good.
session. Do we have
The bar graph there didn't do that.
No, we don't have it on here either. I don't.
What was the bar graph you just pulled up?
I'm just checking if we have it on here. I'm not sure. No, it's daily on there. So this
one underneath? Or what is
that? But the problem with this is I'm unsure of whether this tracks. It tracks both an open and close of a trade, but it doesn't tell you which one is an open and a close. So
okay,
essentially 92 is whether he opened or closed a trade, because if you remember, he only had 94 trades overall. So this is showing when he opened and closed. So there's no way to differentiate that. But then, this shows his activity across those hours without showing the P&L for those.
Okay.
So it's a bit of a limited. I don't really do too much around this because it's quite a limited metric, if you will. But the one that we have that I love is the return distribution by day of the week, because there's usually a weird pattern like this, right? Like if you look at his every day except for what day is that? Tuesday, they're pretty much in unison, right? They've all made about 2%. But then on a Tuesday is a massive, massive outlier where he's done 11.3%. So it's kind of like when you're looking at that, there's got to be a reason as to why the Tuesday performance is so out of sync. And this isn't just with Rob. We see it with many, many traders where one day of the week is significantly better or worse than the others. I don't know if you guys track that data at Edgewonk as well, or if you have. Do you have any kind of insights as to why that may be?
I think for day traders, it is most of the time because of news items, where Tuesday, Wednesday, Thursday is usually most of the high impact news where volatility kicks in, and that's where they make most of their money typically. I think for swing traders, it's harder to say why one weekday performs better than the other. The whole pattern here might also change if you switch it to opening versus closing a trade. So it's kind of hard to find any reason, to be honest.
Yeah, I think the only I use these examples all the time, and it's because they're the ones that stick in my head. I was reviewing somebody's Darwin. This is probably going back a year ago, maybe even longer. And this guy was saying, I make loads of money Monday through Thursday. Then every single Friday, I just keep losing money. I keep losing money, keep losing money. And I was like, okay, well, let's take a look. And I looked at his chart, and it was kind of like this, but flipped, right? His Friday was down here. And I was just grilling him, asking him every question that I could possibly think of to try and diagnose why he kept losing money on a Friday. And it turns out after a long, long discussion, this guy was a builder, so he worked on a building site. And in the UK, generally, on a building site, they end up leaving work at 1 p.m. on a Friday. So what he would do is at 1 o'clock on a Friday, him and his friends would go to the pub. They would start drinking, and he would start trading from his phone after a few beers. And inevitably, he would start losing. And then what would happen is he would have the whole weekend to forget about it. So then by the time he comes in on Monday, he even forgets like that he took a bad Friday, right? So he never approached the problem, because to him, it didn't appear to be a problem because he just kept forgetting about it. And when he told me, I was like, is there not a direct correlation with that behavior to your performance? And ever since, luckily, he's turned it around. It's not like a winning day, but it's still better. It's still more in line with his average performance than just, oh yeah, every Friday he gives it all back. But that's always an example that sticks in my mind because in that specifically, it wasn't anything to do with his edge. As Rolf always says, it's have you diagnosed whether it's you taking stupid trades or is it your edge that's underperforming? And for him, it was just him being a drunk idiot, right?
We had a psychologist on our podcast a few weeks ago, and she also was working with a trader, and she was always having bad days on, I think it was Wednesday or whatever. And then they found out by looking at the schedule that Wednesdays is where she have to rush to get her daughter from school and drop her off somewhere else. So there was this, and this was really getting her off the charts and getting her into this bad state. So it's really important to understand, what
I've
is on
had
in your real life.
same conversation, the exact same conversation with a female trader that I worked with who was doing the same, rushing to trade when trying to do the school run. And again, inevitably, like if you're trying to trade, but you're trying to rush it or your head's not fully in the game, like you just can't compete. There's guys who have put thousands, and I'm sure you guys know this as well from some of your long-standing users. There's guys who have put thousands of hours into developing their edge and thousands of hours to optimizing it and maintaining it. And if you think that you can beat them whilst rushing or whilst having a beer or, from your phone, like, I don't know what your guys' opinions are on that, but executing from your phone when there's guys with 10 screens in JP Morgan, like you're just not going to be able to compete, right? It's not a fair game in the first place.
Yeah, I mean, one of my friends, fantastic trader, I would say probably the best day trader that I know. He trades sometimes from his phone, but that's only because he made the plan the previous day. And then he wakes up in the morning and he sees, gold is at my level. Okay, I'm executing, But you cannot just go on your phone and see, okay, I'm doing something now.
Yeah, it's more the people who will analyze the charts on TradingView on the phone, then they'll open MetaTrade, they'll work out the lot size on the phone. Like, I don't know how people have. I don't know how you do that. The execution's fairly simple, right? Especially if you got MetaTrade, a few clicks of the screen and you're executing. But I hate executing from my phone. I think it feels naughty. Like I shouldn't be doing this.
You can manage your trade or managing is okay, or closing, but opening never.
Exactly. Or if you're taking a look whilst you're out and about, and if you're sat in a trade. So Rob said, what are their thoughts? Who thinks I'm a swing trader or day trader looking at my data? I'm not 100% sure what you mean by that, dude. I mean, by looking at your average trade duration, I mean, I wouldn't class you as a day trader anyway.
No.
I mean, you're kind of a short-term swing trader, because swing traders usually is a day up to 5 days, right? Whereas a day trader is anything under 24 hours. But you kind of fall in between day trading / swing trading. Personally, I would say you're a swing trader. But I don't know. What do you guys think?
Yeah, definitely. I mean, if for me, swing trading, if you hold it for a couple of hours, even like across sessions, I would already call you a swing trader. By definition, day trading is only 24 hours or close within the same day. But especially in FX, if you hold like a 1 hour swing and it goes up nicely, then you're a swing trader.
Well, yeah, because day traders usually go flat by the end of the day, right? That's kind of the rule, regardless of P&L. You flatten your book by the end of the day usually. Disco Salon said, big eye opener for me. Execution often trump strategy, 100%. And going back to what Rolf said at the beginning, your exits often trump your execution as well, which not a lot of people put too much focus into.
Nope.
Okay, cool. Well, I think we're coming up to the 1 hour 40 mark. So I just want to remind everybody that we are running a giveaway today. We are going to release the winners in the next episode that we do together. So potentially next week, just to give people time to enter, put their comments in. All I want you to do is to drop a comment in the live section, in the comments section below, regardless of whether you're watching on X or YouTube. Just say your biggest takeaway from this session, from any, it could be anything that Maritza said, Rolf has said, or I have said. Just pop your number one takeaway from the session, and you will be in with a chance of winning either a yearly license at Edgewonk or 3-month subscription at Darwinex Zero. So, gents, is there anything that you wanted to go over before we call an end to the session?
I think that if I want to give one tip to Rob about how to improve his strategy, I would once again go into take profits. I don't know his take profits approach right now. I don't think there's much you need to do about your win rate. 50% with a 2-to-1 is fantastic, but go again over your past trades that you took, those 100 trades, and with the use of Edgewonk, test how your performance would be if you use a different trade management / take profit strategy. And I'm pretty sure maybe you can push your risk reward to 2.5, maybe even 3-to-1. And that's a huge improvement. Your profit factor is going to jump to 2.5, maybe even, which is holy grail territory. So, be curious and just keep doing what you're doing.
Yeah, because you're not saying anything crazy there, right? Your win rate isn't. You might give up 1 or 2% win rate, but to squeeze out an extra 0.5R on average is it's huge. A well worth trade off, right?
Yes, absolutely.
And also, Rob has got some win rate that he can play around with, because 52% with a 1 point, was it 1.7 or 1.9?
1.9, I think.
So basically 2R with a 52% strike rate. Like, you've got wiggle room to improve. Like, there's some traders who will have, a 50% win rate with a 1.05 average risk to reward. Like, you don't have much wiggle room to try and optimize or play around. But you definitely do. So,
awesome.
It's worthwhile doing what Mirit said, taking a look at your excursions, running some sim tests, understanding what would happen if you ran it at. I always like to do backwards as well. So what would happen if you ran at 1R, 2R, 3R, 4R?
Exactly.
Just so that you understand the difference. And it can also, I also think it highlights the importance of holding your trades. If you look at your sim test for a 1R and you see, well, actually my strategy doesn't perform at 1-to-1 risk to reward, which Rob should, because he has a 52% win rate. But just
curiosity, right?
Where you are.
Yes, curiosity.
Just test. Maybe 9 out of 10 tests don't give you anything, but if you hit this one thing, it's going to be worth it.
100%. So, guys, we're going to call an end to the session here. So, Maritz, Rolf, thank you very much for joining us again. It's been awesome as always. We will do another session next week. Whether it's a full session or whether we just jump on and announce the giveaway winners is to be decided at this point. But we will jump on next week. We'll give some people some time to put comments for the people who couldn't make it to the live session. And we will announce the winners next week. Guys, Thank you all for watching. Thank you all for joining. Maritz, Rolf, once again, thank you very much, guys.
Always a pleasure. Thank you for having us.
Awesome. See you all later.